What is up, guys? Welcome to another video. Of course, we're with the chart of leadership as usual. And I mean, of course, what I try to do all the time is make sure that you guys get the best knowledge from me whenever I do make the time. And all this, as usual, is all for free. You understand? So, of course, over the past couple of weeks, I think since the beginning of the year, I've been uploading a bit more than I used to. And like I always promise, I promise to deliver more and more every time. You know, life gets really busy. There's a whole lot of things going on, of course. So I can't fully dedicate my life to YouTube and be like, yo, give you guys a market breakdown every single day. I know there is a lot of traders on YouTube that are literally dropping like every single day, and I just want to be able to have a proper schedule, so I know, okay, every single day I just spend about 30 minutes of my time, record something, put it up so you guys can actually eat off and munch. Because I know a lot of people actually do ask me for things like one-on-ones, classes, do you teach, do you not teach, and whatever the case may be. And I've not been teaching directly like one-on-ones or doing any direct classes for past about 6 years, right? But obviously the demand is high, so that's why I decided, you know, let me just share my knowledge all the time on YouTube. I mean, whoever that picks up the knowledge picks it up, and whoever that doesn't, unfortunately, doesn't. As time goes, though, I am thinking of probably doing something like a teachable, where I'll probably structure out some sort of a proper breakdown on how to start as a beginner, as an amateur, and as a professional, risk management, blah blah blah, and stuff like that. But that requires a lot of time for me to actually fully just sit down over a period of like a week or two, sit down, record every single details, you know, thorough, you know, bar for bar, from the very beginning to all the skills from entry point, risk management, psychology, funding, what type of trades you should be taking, pay focus, correlations, and stuff like that. So, but I think as time goes, probably over the next month or so, I should sit down and actually just make that time. You just need to obviously just free my schedule and just dedicate that, and then we can probably have a teachable up next, you know, nice website where you guys can actually just go when you're looking for certain information. If you want to just learn about entry points, you get into the website and just fully focus on entry points. But yeah, that's not the conversation today, though. I'm just giving you guys an idea of what's actually in mind, what is in plan. I'm currently at home right now, and I want to talk about something really good. My next video, actually, I'm going to be speaking about KJPY, but on this specific video, I want to tell you, well, basically just show you why you must buy gold till the end of the year. You understand? So we're going to go into the chart and show you guys obviously why you must buy gold till the end of the year. I don't know how you're going to buy it or whenever you're from, but just know that gold is buying throughout the year, and it's been moving very comfortable for the past couple of years actually. And I always say, obviously, whatever that I'll be sharing with you guys is things that I normally say. Gold is very basic and very straightforward to trade, easily understandable, dominates in one trend, it has a lot of sales, but it's an 80% buy market. You know, obviously very tricky, especially when you start breaking it down and getting into lower time frames. You get a lot of good sell positions there, but I'll break it down further with you guys in the office as we get inside and show you guys exactly why I say buy gold till the end of the year. You know what I mean? So let's go inside and break down the chart and see why we must actually buy gold till the end of the year. So let's get into the office and break the market down. Buy gold till the end of the year. And why do I say this? Let's break it out. You know, I mean, this is not it's not really like a signal. I'm not saying like buy this gold right now, don't even analyze. But basically what I'm saying is that gold is a potential buy market. It's been pushing up for the longest time. And anybody who trades gold really well and knows how gold moves knows that everything I'm saying is definitely spot on and significant. So we're gonna get into the office and show you guys exactly what I mean, that market is supposed to be bought, and gold is definitely one that must actually be bought dominantly, you know. So and when I say the market must be bought, I'm not saying every single thing. Don't go out there and be like, leadership must buy everything. No, I'm talking about gold. Buy gold till the end of the year. But let's get into the office, guys. Let's see what exactly what gold is doing, what we've been trading, and how we'll be making money off it, and how you can make money off gold going forward for the rest of the year. Let's get inside. So we just got into the office now, and Rama said we're speaking about gold and why you should buy gold so the rest of the year. So right now on the back here, you can see I've got gold open on my monitor here. So pretty much simple. I mean, we can pretty see that gold has been pushing up. It dropped after breaking all-time high, came back and gave us a very strong low, giving us a double bottom there, very strong resistance. But obviously, it has been buying very aggressively ever since then. You know, it's been moving really nice. It's been actually shifting, very comfortable. So let's get into it. Let's actually break it down and see what we need to do to actually catch more entry points going up. We've been actually buying a lot. I mean, we took a couple of sells here, but the market started continuing going up as usual. So we've been eating it as it was pushing up. Yeah, very nice. Quite a lot of entries here actually throughout the week. Today is Wednesday, and yeah, since Monday, market open, market has just been pushing up and up, and you can see it wants to actually break that high there of 2,960. And all we want is for gold to just keep going up, and it will keep going up. It's in its nature. It's technically built like that. And I mean, gold itself is a very strong pair. So we know very well that it is going to keep gaining value over time, but let's see how we can make money on it as it goes. So let's get into it. So yeah, guys, as you guys can see, so what I've done already is I've highlighted pretty much all the levels that this market has. So for example, you can see that what I've done here is just pretty much on H4. This is a big time frame, so let me just zoom in a bit so I can show you guys. This is a bit more clear. This is a big time. This is H4. So on H4, man, we can pretty much see what I've been explaining on all the other videos, that this is all the zones and highs and lows, support and resistance, on how the price actually moves. Because honestly, this is how price actually moves. There's no other way that the market can ever move besides moving technically. Whether it's pushing down aggressively or going up, it has to move by creating these highs and lows. And that is exactly how we learn to actually trap and move with the market. That's why I always go back to, for as much as you can have a trading strategy, it is not important if you do not have market understanding. You must be able to understand the market and every single pair that you're trading. For example, with gold, there's common strategies like this. So let me make an example. So as you can see right here, gold has moved from the lowest point to the highest point. So if we are to use a breakout strategy that allows us to identify a possible change of direction, then I take my trend line and I take it from the lowest point, and this, I mean, this is a very common strategy that people use a lot. If I take my trend line, I take it from the lowest point and I drag it all the way to the highest point without the trend line cutting the chart, just like that. Let me just adjust it a bit so you guys can see what I'm trying to show you very nice and clear. So I'm gonna put it there. That's also a very good low point because that's where the market. Let me just do this. Yeah. So if I took it from the lowest point, one of the, I mean, we have about 3 low points. So one. Just move this screen out the way. The screen is not in the way. Just move. So guys, just moving a screen out of the way so you guys can see it. So yeah, so if I take this right from this low point here, which is a very strong low, and I put in my trend line, there's a strategy called obviously the breakout and confirmation. If I do that and I put it up, throw the trend line all the way up there nicely, what happens is that we started being able to identify this pattern. So where the market is consistently and respectfully touching the trend. So, you know, just bouncing off it and going all the way up, and eventually gives us something like a breakout there. But regardless of the strategy you have, you need to be able to understand the pair you're trading, because with a pair like gold, it will not play out like this strategy here wants the market to play out. So for example, if we were ignorant to how gold moves and it's us understanding this chart, we'll easily just say, look, okay, the market is respected, giving us enough market movements are right above the trend line, therefore now here is a breakout. And I want to show you guys how people always get it wrong. So right after, here's a breakout. So this is the wrong way of actually applying the skill. So now here's a breakout, confirmation candles, the following one, and the market now has pulled back, and it looks like currently is giving us a retest for it to actually initially just drop all the way down. But with gold, that is not the case. Gold will not even see gold dropping as far as this price, the way the market wants us to actually go back to. Because this is last year around November, actually, where we see gold that if we say the breakout confirmation, this is a retest. So therefore, we're estimating a possible drop of gold all the way down to about 2,400, 2,500, which is not going to happen initially, because if you understand gold and how it moves, that gold will always appreciate, you know, for as long as you know, the width of gold, or the whatever, the mining of gold happens around the world, gold will always gain value, because every single day, every single year, obviously it gains value. I mean, that is, if you look at the price action and how gold has been moving from the 1980s, in 1970s, 1960s, it has only gained value over time, because every single year more gold is actually found, more gold is mined, more gold is established. So therefore, that it'll always gain value. Of course, when we come to XAU USD, it is gold against the dollar. So the dollar is the one that comes with the push. So all the sells that we always take on gold, that is when you actually initially just trading the US dollar alone, because when it drops, that is when the dollar has strength, slightly has strength, and then gold continues to push up. Because of course gold holds more value than the dollar. So it'll always dominate on a buy trend, on a on a bullish trend throughout. So in this case, what I'm saying that this is a method of where using the strategy, people will be using it completely wrong. It doesn't mean because now the market has broke out of price and broken out, it'll come all the way down. Because initially in this case, once you see a breakout confirmation, we must be able to be like, okay, look, you know what? Gold is going to drop all the way down to 2,500, 2,400, which is not the case. So in this way, this strategy, the trend line breakout strategy, does work, but this is when it is applied wrong or applied without knowledge of actually being able to understand that, look, in this case, a lot of people that anybody who would break down gold like this does not understand gold, does not understand the market movement, so everything with the market, besides from a strategy, you need to have market understanding. You need to be able to understand chart movement and chart colorations and what exactly is gold and what moves gold before you actually start breaking it technically, so you are able to actually remain profitable on it all the time. So here we go. Initially what I'm going to do now, I'm just going to remove this trend line because it is pretty much useless. It's not useful. We don't need it, and it is identifying wrong movements, wrong possible movements of the market. All breakouts are good, and I'll show you how exactly you must use that breakout strategy. So instead of doing that, you'd rather just use the trend line, the trend line breakout strategy on gold to actually identify more buy positions than trying to actually make it turn against itself. I would not advise that you actually use a trend line breakout strategy to actually identify selling positions on gold. That is not wise, So anyway, since we already know that gold is buying, it has been buying, and I've been sharing more analysis on this, I want to speak more on it, on the current price and how we've been eating it, and why I say that catch a buy on gold now, and man, yeah, you can buy it for the rest of the year. The more, especially if you're able to identify and break it down and be able to pick up buy positions. As we speak, it looks like it is currently giving us a buy position on H4, but I'm gonna get a bit deeper and show you guys. So next thing I want to do is just zoom in a bit and then identify the overall high point on gold. This is the overall high point. Identify the overall high point on gold. That is the highest point of all time on gold, as you see right there. That is it is about 2,953,975. It's a little bit higher than that, but within that same bracket there, that is the all-time high. And initially, so let me show you guys, if for all those that traded the sell on gold, this is how you would have sold it. Very simple, very straightforward. You can see price started coming down. After it came down, as it came down here, it broke this previous, let me show you this. It broke our previous low area here. So it broke our previous low area right there. So when this price, it broke this area right there. So when this price, it was on a high, as it was pushing up, you can see it broke that high. It went up and came back. Instead of respecting there, it broke the high and they decided to come make it a new, it broke the low, sorry, not the high. It broke this low here instead of actually pushing up and respecting and continue to go up and breaking the all-time high further. It decided to actually come down, break the previous low because it had a support to come and give us and turn it into a resistance. But how did it actually start selling here? Very easy. And these were very nice short sell positions. Price came down, broke the previous low, came then sit under it and pushed back on it and created a high on that previous low there. As much as we did sell a bit here, but of course we knew that this sell was very short. If I go into a lower time frame, you guys can see that obviously on 1 hour. Let's do it on 1 hour where it's a bit more clear. Just zoom out a bit. You guys see this on 1 hour, you can see that it's a bit more, it's way more clear. And on 1 hour, it gives us 2 entry points. When the price pulled back, when it pulled back, drops, pulls back, gives us a high there, gives a very strong high, drops a bit, fails to break the low at first attempt, goes back up and gives us a second entry point. And when it went back up there, very comfortable, touches there, fails to break that high, and of course comes down and breaks the low. So here it is. It actually just breaking that low right there. After breaking the low, of course, what must it do? Market nature, guys. I think I've been teaching this over and over again. After breaking that low, it has to pull back and sit in on that high there, on that low, giving us a new high. And these are more, on 1 hour, it looks just about 2 candlesticks. So we'll go to a lower time frame, it will become more visible. Let's go to 30 minutes. Show you guys a bit better. So in 30 minutes, we have more technical movements, more candlesticks. So of course, we're able to see more price movements. This is 30 minutes. As you can see, though, in 30 minutes, the market stayed quite long on that high there, giving us a couple of entry points, because you can see our first entry there would be, let me show you guys, our first entry point right after that, it would be this one right here. This is our first entry point that we would have sold here. Definitely there, you know, and then another entry point that I can see there is right here. This is definitely a sell area there, you know, and then pretty much in this zone it stays on the high, gives about a couple of entry points. I see another one right here. This whole area here is a sell position. This whole area here. So we have about one, two, three, four entry points before the market drops in 30 minutes, and then of course drops. From there it's just a patient game. The market then drops, breaks the low, and after breaking that low, it pulls back on that low and gives us another selling area there. So let me just zoom in a bit so you guys can see it. Gives us another selling. They would take another sell there on gold. So let me just do that. Highlight another sell. This is all these small blocks is just me highlighting all these sells. And what is it doing? It is selling on the previous. Just change the color. Let's make it green. I think you guys can see the green. Yeah, so right there. So it gives us another sell. After the sell, nice, the market drops nicely because it has given us a sell on the previous low, which is pretty normal. Short sell, we take the drop, market pulls back. What do? Identify another sell. The price pulls back to sit in on the previous low that the market has just created to give us another sell position there. You guys can see that, another sell there. And which previous low am I talking about? I'm talking about this one, guys. So the price drops, there's a low there, right there. You can see the price comes back in and actually respects that low. After that, it drops nicely, fails to break the previous low in first attempts, pulls back in, sitting on the inner high of the inner low of the previous high, giving us another selling opportunity. So we had about 3 selling entries just on this pullback here. And then the market, what does it do? Decides to drops in nicely, deep in profits, and then price, of course, pulls back to come and give us another selling point on our previous low right there. So what does it do right here? Price attempts to actually break the previous low, but actually it's just going to sit in on the inner low of the previous high, which are very strong zones that I always spoke about, that if the price is pulling back, especially whenever if the market is going down, the price pulls back, either it's going to pull back on the previous low, or going into the pit there and sit in on the inner low of the previous high. That is what we call a stop loss hunt, or whenever you feel like, or whenever people say I got kicked out and then the price continues to go my direction. That's actually what happens. That's why I don't advise that people place their stop losses on the previous high. I do not advise that because the market can push you a bit above now and then, you know. Price goes back in. What does it do? It sits in on the inner low, right? Look at that. Inner low of the previous high, and gives us our next selling entry. You know, in this case, it's really your choice whether you're still holding these positions or you've closed them, whether you're day trading or scalping. It's really up to you. You know, the market gives us another selling area there. Price, what does it do? The price pushes down and then fails to break at first attempts, pretty much normal, and then pulls back in, sits in on the inner low of the previous high. What is that inner low of the previous high? It would be this one right there. So we have 2 prices here that the market pulled back to. This is the inner low, basically the inner low of the previous high, as you can see right there. Or you can just fully identify it as the price just pulled back and rejected on the previous low, creating a new high. Very 2 strong zones that we can actually rely on to use it as a rejection point, as a rejection where the market now continues to drop. Then we see a very strong entry point there. This is me highlighting the entry point with the green. You guys can see this one there. And price continues to drop. This is how we nicely short ate this gold as it was coming down. It drops nicely, pulls back up, of course, giving us another selling opportunity on the previous low, making it a new high. This is the previous low, this is the zone. So you never really know whether price will go directly onto the low, play in the zone, push above, but that is the zone. Once the price starts playing in that area, you know that is when you must start taking your solid positions, right? But this is all on 30 minutes. The price actually drops and now gives us another selling opportunity. So very simple, very straightforward. As you can see, these are about how many? 1, 2, 3, 4. So we have about 4 trading opportunities there as the price was short dropping for us. So in this case, when the market is going down like this, that's the only time I'd ever advise you to use the trend line, because when you come in with a trend line, you pretty much just go to 15 minutes because you just want to see confirm the entry point. The trend line will give you a late entry, an entry later than this one, because what the trend line will do, it does this. It wants to pick up breakouts and says to you, only enter after the breakout. So in this case, you have the trend line, you place it here, you're looking for 3 touches, 1, 2, and 3. So look at that breakout. The breakout comes here, confirmation candlestick is here. So you'll be pretty much taking your sells really late at that point, whereas you could have caught it there. So you can use the trend line just to identify the confirmation of the movement, but to enter with the trend line is a bit too dangerous because you'll always catch the entry really late. But then you can use that as a confident, because if you're not too sure about it, placing your trend line and be very confident. I mean, even at this zone here, look at it. Put in the trend line, make sure that it's just touching the wicks. It breaks out here. It would have given you a sell very late. So you don't want to actually use the trend line to identify entry points, you know. So in this case, it becomes very easy. Price now goes all the way down. Remember, this is a short sell. So as much as you are selling gold, you must be aware that anytime it can turn back up and start giving us buying entries. Price goes down. As it drops, you now obviously identify the low point. So this is a low area here. And as it pulls back, look, this is what it does. So this is why you actually have to monitor and pay attention to your price, because the price now has come low and has reached a support zone that it is about to turn into rejection on a 4-hour time frame. So let's go to 4 hours. Let me show you guys, just move to current price. What I was breaking down, guys, is this drop here, you know. So you can see the price now in 4 hours. If I zoom out, on 4 hours, the market has now rejected very strong. It has found a very strong low there, and now it has rejected very strong, and is using that to actually travel back up. That is at about 2,800. Bounces off there, it refuses to go any lower than that. And all those sell trades are showing you, they're all happening here. So these are all short sells, you know, that you would have taken. We made a bit of money there, but you have to be really cautious and pay attention, because at any time, once the market starts approaching a very strong resistance on H4, 1 hour or a daily time frame, it can definitely turn and start continuing to push up and give us its dominant movement, which is the upside. So this is how obviously we'll continue to buy gold. So with gold, now this is where the trend line comes in, guys. This is how you must use, this is how you can use the trend line, instead of how I showed you first in the beginning. I said that is the wrong way of using the trend line breakout strategy. So in this case, you can definitely take the trend line because you're placing it on a movement that supports the chart and supports the market. Gold is buying, so using a trend line for buy analysis is definitely profitable. Take a trend line from the highest point, making sure that it doesn't cut the body of the candlesticks, let it float above, identifying a consistent pattern and market movement that has taken place when the market was actually dropping, was coming down to give us an entry point, you know, or give us a possible market change of direction to stop to stop the sell movement now, as the market is rejected, to start actually pushing upwards. So as you can see, the trend line, what does the trend line do? Gives us 1, 2, 3, 4, about 4 or 5 touches before it identifies a breakout on H4. So should you buy on this H4 chart here? It is a bit late to catch buys here, because I mean, you can see the price comes from a very strong low here, so you could have taken your buys there. So I don't like advising that, especially on bigger time frames like H4. I don't like advising people to actually take your entry point based on the breakout and confirmation and retest on H4, because you'll always catch it late. I mean, H4 is only giving you an entry point, market breaks out, confirms, so your very first buy opportunity on gold would have been here, which is pretty late. You've missed out on so much of the price. You could have actually just turned with it from that low there. So let me show you how I'm going to be able to identify entry points before the breakout and continue throughout to buy further even after the breakout. I'm going to leave the trend line there, and immediately I want to go to H4. You see on H4 exactly how the market started moving. Let's just zoom out. Very nice. So you can see on H4 price actually came down after sitting on that very strong resistance there on H4. It pushes up now, breaking this previous low, going right into it, and then also breaking the previous high. And immediately, what did it do? Look at it. Very nice and comfortable. It breaks the previous high. Look at it. Breaks the previous high and makes it its very first new low after the drop. So pushes back up. Look at this. It pushes back up, breaks the low, breaks the high, and comes back and gives us our very first retest and buy positions on this very same high that it has made, it has actually turned into a new low. You can still use the entry point to cut in here and to be able to identify the breakout sooner. So what you want to do is just on the touches where the major trend line has bounced off there, take your trend line off that touch, cutting in there very comfortably. Let me show you guys, cutting in there very comfortably. Make sure that the trend line does not cut through the bodies, just floats above the trend there, just on the highs, bouncing off the highs very nicely. And look at that. So let me just zoom in a bit. You guys can see it. And look at that. You can see that what the trend line now, you pull in this trend line off one of its strong highs of the major trend line. As you can see, that gives us more than 5 touches. How many highs are just above the trend line? I mean, are just below the trend line? Is over 1, 2, 3, 4, 5, and more. Now the price. What does the price do? So what we want to see is the market must continue bouncing off this and going down. In this case, it chose to actually disrespect the trend line. It broke out and gave us a confirmation candlestick. So that does confirm that, okay, once it breaks out, it also confirms that it has broken the previous low. And then we monitor and watch it actually attempting to break the previous high. And it obviously goes right over the previous high. And then we know up next that the market must come and give us a low right here. Because it has broken out, it has broken the previous low, it has broken the previous high. The next thing it must do technically is just give us that low where we actually take our very first buys at. I think you guys can see there, right there, very nice, very clean, where the market must give us our very first buys at. I'm going to remove all these lines here because these are from the previous entries, just so that the chart is a bit clear. I'm removing all the blue ones because they were from when I was just breaking down. Even though they are identifying movement in future, they are also just highlighting other prices that have taken place. But I'm going to remove all the blue ones because that was when I was speaking about the sell trend, the sell trades that were taken there. Price breaks out, confirms, pulls back, gives us more or less of a retest, whatever you want to call it, breakout, confirmation, and retest. Or for me, it's just it broke, comes back and breaks into the previous high, comes back and sits on it and gives us our very first strong low for us to start buying again. You're not too confident, it's fine. If you don't want to take the entry, you feel like, no, you know what, it might come back down, then wait for it to actually break the major trend line that we've placed from the overall high point on H4. From there, it breaks out, it breaks it here, as you can see, confirms by sitting on it there, then gives us a very first entry point after the major trend line. But here, right here is where I would have taken my very first entry point, right here. This here would be our first entry. This here would be our first entry. So I would say entry 1. This here would definitely be our first entry point. So just zoom in there. Properties, let's do this. So yeah, this is entry 1. I don't know if you guys can see it. They have written the entry 1. Price now on 1 hour pushes up. What does it do? Pushes up and breaks above the previous high. And as you can see here, as it is breaking above the previous high, look at this. It breaks, this is the previous high. It breaks the previous high. At the same time, yeah, look at this. It breaks. I'm just gonna zoom in for you guys that you guys can see it. Let's do this. Also, just stretch it a bit. You guys can see that, very nice. So it breaks above the previous high, and at the same time also breaks the trend line. So there a double confirmation. Market pushes up, breaks above the previous high there. What does it do after that? Comes back and sits on it and gives us our next buy entry point. Then price goes up a bit further there, as you can see, pushes up, comes back down, and then it sits on our previous high and giving us, of course, the next entry point. That is nicely there. Very cute, very nice, very demure. Bounces off, we'll buy them further, and just say reset chart. So there we go. You guys can see that very nicely. Price goes up. This is our first entry point. This one here would be our second entry point. This would be entry 2. Let's do that. This here would definitely be, this here would be entry 2. Entry point number 2, price goes up, breaks the previous high, and then of course gives us our third entry point. So this would be entry 3. This would be entry 3. As you guys can see, they're very nice and comfortable. Pushes back in, gives us our very buy, gives about a couple of buy positions here. Actually, if I zoom in, show you guys nicely there. Just zoom in. Look at a couple of buy. This is on H1. Gives us a couple of buy positions here. As you can see, buys here, and there's another buy entry. Price fails to break the previous high on first attempt. So fails to break the previous high. After giving us this entry, fails to break the high on first attempt. Comes back in, sits in on the inner high of the previous low. Inner high of the previous low is right in there. There's a third entry point. So which means this right here would be our entry. This is entry 4. Understand? This is all on H1. Entry 4, price, what does the price do? Of course, after that, the price must go up. The price then decides to, of course, break the previous high and then come back. Right now, as we speak, the market is giving us another buy another buy opportunity on gold. It's time to actually place more buy opportunities. As you can see right there, very nice, very comfortable. The price has, this is entry point number. This would be entry 5. And this would be entry 5. Now, currently, as we speak, gold is sitting on entry point number 5 since it has turned on that low. So, first buy, second buy. So, the first buy was right after the inner trend line breakout. Give us our first buy entry. Second buy entry was after the major breakout trend line. Obviously, that also broke our previous high. Coming back to sit in on the previous high, giving us a new low. Comes back and gives us another third entry point, fourth entry point. Look at now, as we speak, gold is currently sitting on the, it has actually gave us our fifth entry point. This is currently giving us our fifth entry point. The first one here, I have not quoted anybody. I don't know, maybe somebody has quoted. The sixth one, we also missed it. But as we speak right now, gold is giving us another entry point, because after here, this is what it will do. Gold is going to push up and then break this high. This is the current high. It's not the all-time high. It is the current high from the previous low. And where is the previous low? This is the previous low. Previous low, current high from previous low is right here. So now the price must definitely giving us more buy. It's still currently giving us buys here. I mean, let me go to a smaller time frame, like 30 minutes, and let's see exactly how many entry points we can identify. So 30 minutes also gives us very strong lows. Give us a buy here, buy here. You can highlight here. First buy was here. Taken that, so we're pretty much just waiting for it. I'll still be very patient. Attempting to break the previous high. It looks like it's failing, but it's definitely going to break above. It's part of market nature, really. The market won't just swerve, and move how you want it to move. It can consolidate, it can move back and forth, but definitely the dollar is fighting it, but it's definitely going to break above there. So you can see our entry point here. So this is a buy. You guys can see right there. So buy. This is definitely a buy. Definitely a buy here, and then we have another buy here. We have another buy there. So one entry point, two entries, so one entry point, as you can see, one entry, that's the overall drop, and we've seen already two entry points, and that price hasn't broken above. If somebody's taking a buy here, they're already in profits. I'm not holding positions as yet on gold, and as I'm looking at it now, I think I'm going to take entries right after this breakdown. So this is 30 minutes. 30 minutes still giving us a very strong buy there. It is currently pulling back. I think it is sitting in right here on the inner high of the previous low, inner high. It is dangling right there. As you can see, let's go to 15 minutes. As we break it further into current price, you can see 15 minutes. It is pretty much at 15 minutes. You can see the price has been dangling on this very strong high here. So that is where it's currently sitting now. Definitely good to buy. You can add an entry as we speak. Good to buy. And from here, we want to see this price actually break this high here. Before it comes to break this overall high at this point, we want to see this price actually break this high. There's the high there. And this is where you can actually use the trend line. Very nice. The trend line will come in very handy here. Place your trend line on that high. Let it just touch. We're just looking for 3 touches here. 1, 2, 3. Then, of course, we've seen the breakout will happen somewhere around here. And from there, we're going up further. So what you want to look for is definitely long buys, long buys, very long buys. So you can see price was on this low here. So you can see price comes here. From there, went up there, came back down here, broke that high, gave us a high there. Now sitting on the inner high of the previous low or the previous high, sitting on the previous high. And then what we wanted to do now, what it will do next, and what we wanted to do, it must break out here. And then, of course, go and give us another high at that point. So that is very nice there. So let me just change how it is there. So make it a bit thicker so you guys can see it. So this is very simple. Ta, 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 ta. Next move, gold must go up. It is already pushing up here. If I go on 1 minute, let me show you guys on 1 minute. We're pushing it to a current price. On 1 minute already, we've lost the entry point. So if we wanted to buy on 1 minute, we should have caught this reversal right here. Would have been in good profit. But definitely I see it dropping on 1 minute a bit. It will come to drop into this zone. And from there, it will definitely break that attempt there, as you can see. So you mustn't let lower time frames confuse you. And because on 1 minute, 1 minute can easily just make you think that it's going down. So always go back to your 30 minutes, 1 hour in H4. So you can see the market a bit better. So you can see there on H4, I mean on 30 minutes, what we're looking for. We're looking for a very clean, bullish movement. So very nice, Gold has been moving, buying very comfortably. Very nice chart, as you can see there. Very, very, very enjoyable. I mean, it's nothing. It's priceless movements here. So we'll just keep looking for those buys, and this is the buy you must catch for the rest of the year, guys. Just keep looking for these entries when it pulls back. So I've shown you guys 2 ways on how to trade gold. 2 simple ways, right? Know how to catch the reversals. I've shown you on how to catch these reversals whenever the market drops and gives us those short sells, and how to actually pick up the to spot the buys again. Very simple. You place your trend line as it drops, and then cut in with the trend line, with the inner trend line, where it shows you a very nice clean breakout, and then of course you're able to eat it going back up again. So this is 2 ways on how to simply, straightforward, make money on gold. Very simple, very understandable, and not even complicated. So this requires market understanding, guys. You must, before you can speak about strategy, or whether you are a breakout trader or trend line, whatever, support and resistance, SMC, robot, or whatever structure that you use, you must be able to understand the nature of market movement, how the nature of market movement is. No matter how much breakouts and sells and resistance you want to see on a market, if you do not understand the pair, you'll always struggle with being profitable. With gold, never ever look for long sells. It is unhealthy. It is pretty much stupid actually to look for that, because we all know what the nature of gold is. We don't need much. It doesn't need, I don't know, it doesn't need, what is this, rocket science. If I go on a daily chart, we can pretty all see, we can pretty much all see what gold does. It's just been buying. It doesn't need rocket science, this thing, Look at this. So from 2013, this market has been going up. It's not going to change now because you are a trader. Now suddenly it's going to start dropping, So gold continues to gain value over the years. And what are the chances of gold losing value and not ever gaining value? And suddenly the dollar is going to overpower gold, and it is going to go drop back. It's going to drop back to 2005. That is unlikely. It's actually it's a 0.00001% out of a million percentage. So we continue actually being realistic and transparent. Look, we want to come back and break this all-time high. If I go on H4, we just want to see gold. If I zoom in there, just zoom in for you guys. We just want to see gold break this all-time high. And all I want personally, and what will happen, is definitely gold is going to break 3,000 and go above, all-time price. So gold will one day, in a couple of decades or years, it will definitely hit 10,000, 15,000, 20, 100,000. God forbid, even the day after we die, gold will continue to buy. There's not a point or possibility in life where the gold will actually lose its value and tomorrow will be of less value. Unless technology improves to a remarkable amount of value. But for now, as we are here, we'll continue making more money of gold buys than sells. And I've shown you guys a simple way on how to make money on gold when it is pulling back to give us those short sells, and when it continues to give us the powerful continuous buys. In this breakdown, things are very simple, simplified, and very understandable, guys. And I hope you guys actually love this and enjoy this breakdown on how to buy gold for the rest of the year.